Good morning, traders. Manny Cabrera, co-founder of MDC Trading Academy. Another beautiful day here in the neighborhood. Being today Wednesday, midweek, January 22nd. News items for today. There's nothing on the docket till, this thing is very slow on me today, until Thursday, 11 o'clock. Crude oil inventories, and of course, flash manufacturing, 9:45 on Friday. So we're pretty free in reference to this type of news throughout this trading session. Jumping to our daily, market continues to establish all-time highs. Market continues with decent volume. We're averaging over a million. Our ATR is at a healthy 25. So the market is moving. It's a little bit choppy, guys. You have to be sincere about this. You have to be honest. It's been a little choppy. So trading the extremes, the outer bands, the outer spaces of your where you can recognize your strong support, your resistance, trading off these, especially diagonal trend lines, are the best places to trade a market like this. Let's go into a bit of detail and tell you the reasons why that is. Here's a nice big time frame. As you continue, market continues to move higher, but you notice they're not clean runs. It's not your typical market runs, market retraces, market runs, market retraces, market runs, market retraces to the upside. It is moving higher, but it's not moving cleanly. It's moving kind of like this, and then it comes deeper, and then back up, and then finally goes up here, and then it'll do one of these where it'll tempt, then it'll move shorter, and maybe consolidate for a while, then run. So it's kind of like this real difficult place to find entries. It's a very difficult place to find entries because of the way that it's moving. Look at it here. Retrace, there's a good retracement. Here we go again. Here's the next level of retracement. But what happens? It fails. And then it gives you a false signal to the downside. And then it comes back up here, and then it launches. You see what I'm saying? Then it launches. And again, same pattern over and over. Then we get the consolidation. So it's not a very clean market. Look at this mess here. Look at this mess here. It's just really messy here. It's not a very, very neat, very, very practical, and very efficient way to move the market up, which in turn turns into a very difficult situation for us to trade. I created this Fibonacci here way back in, I think it was on 16th or the 15th, from this consolidation area that we had here. And as you can see, the market hit our key areas, all of our key areas, including the high. It kind of stretched that and it created the highs. And here are our future targets. If you're looking for future targets on the S&P, we're talking about this area right about here, and potentially around this area right about here somewhere. Our next potential areas. To the downside, plenty of reference points, The most significant one, obviously, is this one down here. And you can also correlate that with your daily. If you look at your daily, you notice our key points is this low from this day here, which was yesterday, which is at the low was at 3307.25. That's the low that's down here. This is 3281. This is 3307, right around here. But this is the most significant low. So those are our reference points to the downside. A reference for trading this day. It's basically wait for the breakout. Wait for the breakout. Wait for the breakout from here, or wait for the breakout from the all-time high. That's the best way to play this game. And of course, in these particular markets, again, look at the choppiness that we have here. Market running up, just chopping around and eventually breaking through. It's just very difficult to trade these kinds of markets. So I just be very careful. It's better to wait for breakouts or clear trend lines that can give us the type of area that we can rely on. All right, take care. Have a great trading session. Let me know if you have any questions.